Hello, I'm Nikki, founder and mortgage advisor here at Dun & McCarthy Mortgages. Now today's video is a little bit different and I'm going to be walking you through a recent client case study and explaining how we managed to rescue this client's mortgage from a potential decline when they were about to go to their high street bank and get them a really great deal. So if you want to know how we did that, then stay tuned. Now guys, this video is highlighting ultimately why the knowledge and experience of the team here at DM Mortgages is so beneficial to our clients. Now, not only do we save our clients money by getting them the best mortgage deals, but often we also save potential mortgages from declining where clients have gone initially to their own bank or sometimes to other brokers, had trouble, encountered trouble, then come to us to ultimately help pick up the pieces, if you want, for a better word. But what I wanted to do today is really take an example of that and explain how this client, we really managed to help them, get them the best mortgage deal, but also get them a mortgage on a property and in a situation where they would have struggled going to other banks. So I hope that this is useful anyway, and I'm going to start by giving you a bit of a background on the client situation, a bit of background on the property that they wanted to buy, because that's important in this example. Then I'm going to talk through the lender we chose, why we chose them, and then I'm going to talk to you about the product itself. So let's get into it. So a bit of background on my client. Now, he was a first-time buyer, 24 years old, worked in sales, had been employed in his job for 11 months. Now, one of the challenges in his situation was that because he worked in sales, he was earning a very good income, but half of his income approximately was made up with a basic salary. Some of it was made up with a car allowance, but the rest of it, the remainder, which was approximately half, was made up of commission. Because commission varies from month to month, then again, that's one of the challenges in terms of the lender that we selected. But I'm going to come on to that a bit later on. Now, the client also had a 5% deposit. When we had a discussion with him, can you raise more deposit? His answer was no. If I have to raise more deposit, then this is going to push back me getting onto the property ladder too long. And I want to move quickly, because at the moment he was paying money in what he described as dead rent. So he would rather use that money to invest in his own property, which I completely agreed with him on. So that's a bit about the client, or important detail that you should know. In terms of the property itself, this is where things got a little bit tricky. Now, the client knew that he wanted to purchase a leasehold apartment. He wanted an apartment because where he was planning to live, he knew that houses would have been a bit out of his budget. So he'd settled on the idea of an apartment. He needed 2 bedrooms as a minimum, and he wanted it to be a modern style apartment. Now, they found an apartment and he absolutely loved it. Again, another challenge, and I'm going to come on to this in more detail a bit later on, was that the property itself was between a commercial premises. It was on a high street next to a supermarket, and on the other side was a food outlet. So again, whilst that in itself doesn't mean that he cannot get a mortgage, but it's just an added layer of complexity that we need to take into account when we're looking at which bank to place him with. Now let's talk about how we selected the most appropriate lender for our client. Now, as a broker, immediately we knew what the challenges here are. But again, most people may not necessarily recognise that some of the things in that client situation were even an issue. But there are many banks that would not accept the above situation for the following reasons. The first reason, and this one was probably pretty obvious, but anyway, the first reason is because his income is made up heavily of commission. Now, again, please don't take this as if you work on commission, you can't get a mortgage. That is not the point of what I'm saying here. The point of what I'm saying is that, again, it just highlights even more why you need specialist advice, because the lenders will all view and take commission into account very differently. So to get the value of the apartment that this client had wanted to buy, the value of the apartment was 200k. We knew that we needed to find a lender that was going to be the most favourable with his commission. Now, some lenders will take into account 50% of the commission you earn, some will take 60%. There are a select few that will take 100%. Some will take 100% if the P60 supports it. If it doesn't, they'll take 50%. So things range massively across the banks in terms of how they will view that situation. Again, some banks will want 3 months track record of commission, some will want 6 months, some will take 3 months, but if one of the 3 months shows 0 commission, they won't take it at all. So you can see how things vary massively. Now, if you are watching this video, then I assume that potentially you're looking to buy a property using a mortgage, move home, or review an existing mortgage. Now, if you trust the content on this channel and you've been finding it valuable and useful, then imagine the value that you would get from us helping you with your own mortgage. Now, here at Dun & McCarthy Mortgages, we help to guide you through the house buying process and find you the best mortgage deal, give you advice throughout, and make sure that you're not making any costly mistakes through the house buying process as well. Now, we're here to help you get the best mortgage deal from thousands of products, from lots of high street banks and building societies, as well as specialist lenders as well. Compare all of your options to find you the best deals. Now, head over to our website, dm.mortgage, and book in for a free of charge appointment today. We can help you no matter where you're based in the UK, and we can give you your options and provide you with advice so that you know exactly where to go and what to do next. And of course, if you're finding this video useful up until now, then you need to hit that subscribe button and the notification bell so that you never miss a future upload. But now let's get back to the video. Now, the next sticking point, if you want to call it that, was the fact that the client had not a 5% deposit, but the fact that he had a 5% deposit and wanted to buy an apartment. Now, again, I know as a broker that lenders can be restrictive when it comes to small deposits on flats. Some lenders, HSBC, for example, require minimum 15% deposit if you're buying a flat. And if you've got any less than that, then it declines. Now, the reason for this is because flats typically do not have the same capital growth as houses, and some lenders want lower risk applicants. The higher the deposit, the less chance of negative equity, and on a flat where the capital growth is slower, some lenders just prefer a higher deposit to balance that out. Now, through our experience, we knew which lenders would consider a 5% deposit on a flat. There are some, but they are a small handful. Now, like I said, we had the conversation with the client to say, can you get to a 10% deposit? He was adamant he didn't want to do that because it could have been another year plus, and I completely understood his point. You know, at the end of the day, house prices are rising by 4.3% a year. So his argument was, and I agreed with his argument, that if he waits another year, he could potentially be paying an additional 4.3% for the same property. So not only is he going to have to save up an extra 5%, but he's also going to have to save up more money on the basis that the price of the property has gone up. And of course, with the recent Bank of England base rate rise, rates are going up. So his argument was, whichever way he looks at it, he's likely to be paying more money, not just in the rate for his monthly payments on the interest, but also the price of the property itself. So he wanted to get onto the property ladder as soon as possible. Now, the next thing we had to consider in choosing the appropriate lender for this client was the fact that the apartment was so close to commercial premises and was on a high street. Some lenders, again, will categorically just not lend on properties that are on high streets. Some won't lend if it's next door to commercial premises. There's a variety of reasons, again, why we had to be selective about the lender based on the property description. And what I would suggest as well, guys, is to check out my video on properties that can be tricky to mortgage, because that will help you get an idea on types of properties that are tricky and why they're tricky. Now, can I just add, so they were the main 3 sticking points: commission, making up the bulk of his income, 5% deposit on a flat, and the fact that the flat was near to commercial premises. Now, what made this situation slightly more challenging was not any one of those issues by itself. It's the fact that we've got to consider all 3 of those things combined and find one lender that's happy to accept all of those things. Now, where this client was fundamentally about to make an error was the fact that when he came to us after he'd found the property, he said he'd already started making inquiries with his high street bank. His high street bank was a bank that insisted on a 10% deposit on a flat. So had he have gone through that bank, the application would have declined. And that's where we obviously explained to him that he needs specialist advice. So it's a good job that he'd came to us and explained the reasons why, and it all made sense. So the product that we selected once we found the lender that would accept this applicant was, so based on the purchase price of the property, which was actually £200,000, he needed to borrow £190,000. So he had a 10% deposit, a 5% deposit at £10,000. Therefore, he needed to borrow 190, and that was spread over 35 years because one of his priorities was to keep his monthly payments as low as possible. Now, originally, the client had considered a 40-year mortgage term because, again, his priority was not how much interest he's paying over the long term, it was to keep the payments as low as possible. But the particular lender that we selected didn't offer a 40-year mortgage term because not all of the lenders do. And due to the challenges that we had finding a lender that was going to accept the issues we explained earlier on, that was the one thing that he had to compromise. Now, we went for a 2-year fixed rate because he had a small deposit. So our advice was that likely he probably want to review the mortgage sooner rather than later, rather than tie in to a slightly higher rate because, again, the smaller your deposit, the higher interest rate you will pay. So on the basis that he's only putting in a 5% deposit, he is going to have to accept that his interest rate is going to be slightly higher. Therefore, as his mortgage balance reduces and potentially the property value increases, but even if property values don't increase, he's still paying off more of his balance ultimately. Now, appreciate we are in a climate where interest rates are potentially rising, but ultimately, by putting down a 5% deposit, he is going to be paying somewhere between 0.5 and 1% more than had he have had a 10% deposit. So again, upon mutual agreement, it made sense for him to review that sooner rather than later. So the rate that he had was 2.84%, which in actual fact is pretty low for a 5% deposit and taking into account the issues that we had to consider earlier. Now, a few other bits that made this product a really good product was the fact that it came with incentives. So he got £750 cash back on completion to help cover some of his legal costs. And the product also included a free valuation. So a valuation typically is going to cost about £200, but that was included free of charge. Now, the reason that that was even better on this particular purchase is because it mitigates the risk of the valuation having an issue. At least he's not wasting the fee on a valuation, because even though this lender did say that they would consider an apartment on a near to commercial premises, ultimately every valuation is still down to the comments of the valuer. So to again avoid the risk of losing any fees, given the fact that the valuer goes out, inspects the property and says that they have an issue with it, it included a free valuation. The product didn't come with any fees, so the only upfront costs that this client had to pay was his solicitor costs and the fee that we charged him to help him to arrange this deal, which was £295. So you can imagine, guys, we'd done such a fantastic job for this client. He found a mortgage where he would have been declined with so many other banks without the knowledge, expertise and help of us here at DM Mortgages, and ultimately we managed to process things as quickly and as smoothly as possible, and that ultimately led to a very happy client. And on that note, head over to the website dm.mortgage and book in today for a free of charge appointment so that we can get you on your way to purchasing your dream property. And also make sure that you subscribe to the channel and hit the notification bell if you do not want to miss any future uploads. And I'll see you in my next video.